Welcome to the New Wealth Wave podcast hosted by Dr. Joaquin Wallace. We're diving deep into the intricate layers of the 7-stage generational wealth model to offer invaluable insights on legacy building, wealth accumulation and preservation, and financial growth across generations. I'm Dr. Joaquin Wallace, and this is the New Wealth Wave podcast. Hey, future wealth builders. This is Dr. Joaquin Wallace, host of the New Wealth Wave podcast. Guess what? 2025, the first quarter, is over. But we had some great guests, and I like to take you back and look at some of those highlights of the first quarter of 2025. And to help lead the discussion today will be James Alexander, who is a certified financial planner and partner with Edge Financial Advisors. He co-hosts Ed's Edge, a show geared towards regular, everyday investors looking to live a life of freedom. His approach integrates sound financial strategies with the understanding of the psychology of money, recognizing how emotions influence decisions. He emphasized the importance of emotional well-being in financial planning. How do you use behavioral finance principles to help clients stay disciplined and avoid emotional reactions that can derail their long-term financial plans?
Going back to avoiding making mistakes, part of that is staying disciplined, which is easy to say, hard to do all the time. And so what I do is, if those listening, if you can visualize this, I'll draw a chart of the United States stock market, call it the S&P 500, over a long period of time, call it 20 years. And there's the ups and there's the downs, right? I'll say, let's pretend the next 20 years is this exact chart. When is the best time to get in? And people look, well, at the bottom, right? We want to buy low. When is the best time to quote unquote get out? And they're going to say at the top, right? Okay, how do you know when that's going to be the case? And how do you know when it's the bottom? Is it going to go lower than this? And it gets us thinking about, it's going to be next to impossible to time this thing. With the right strategies, we can be tactical, but we can't time the market. Then I have to remind them about that sometimes. But on that bottom, I'm going to say, okay, you know the best time is to take on more risk, whatever the case may be. Do we believe in the global growth of the United States economy? That's probably one of the most important questions we need to answer. If we believe that the world is going to grow, then this is why we're investing.
So traditional finance assumes investors are rational, while behavioral finance recognizes we have human quirks. As a CFP, how do you balance these perspectives, acknowledging human flexibility while empowering clients with knowledge to make better choices?
Yes. Oh, such a powerful question. I think we need to take a step back on that question and say, first and foremost, let's not be hard on ourselves about what we know and what we don't know, because we don't know what we don't know in this financial world if we're coming into this firsthand. They don't teach this in schools. And we can have a whole topic as to why. I have my own belief on that, but that's the matter of the fact. They don't teach this. So my mind is, don't judge yourselves about not knowing everything. But how do I approach that with my clients is I approach it strictly from an educational perspective, that edification you mentioned. There are pros and cons of every financial decision we make. And some people will say, well, this is the right way and this is the wrong way. And yes, the fundamentals are key to answering what's good and what's bad. But beyond that, my job is to educate them, and then they decide after understanding the pros and cons.
What common behavioral biases do you encounter with clients, and how do you help them overcome them to make sound financial decisions?
Probably the most common one is confirmation bias, which is I want it to be true, therefore I believe it to be true, therefore it must be true, and anyone that says anything else is wrong. And it all starts with the fact that I kind of want it to be true. And we're not going to talk politics today, but I'm going to give a story along these lines of, we know our new administration, our new president. If you are not a fan of that, you most likely have a confirmation bias that the economy is going to struggle over the next 4 years. And so what happens is you're going to go on your iPhone, you're going to say concerns about the Trump administration. And Apple is a very smart software device. I don't know the ins and outs of it, but what I do know is it knows that you think there's going to be concerns. And so it's going to keep sending you articles unbeknownst to you within all your apps around problems. And so it's going to confirm what you think to be true. Conversely, you think the Trump administration is going to be wonderful. You're going to say all the great things, and it's going to do the same thing on the other side. And so it is convincing you to be true, when the fact of the matter is the president has very little impact on the overall outlook of stock earnings, which drive stock markets. They have some, but not as much as we are led to believe. So confirmation bias is a big one.
Mr. Sellingut. He is an investment professional with over 50 years of experience in private portfolio management. Before selling his profitable business in 2023, he managed over 325 portfolios totaling $110 million in assets. Mr. Sellingut developed proprietary investment concepts, including the working capital model, QDI plus PT, and smart cash. His methodologies emphasize disciplined investing and income independence, especially for retirees, which is important, which is stages 5 of the 7-stage generational wealth model.
Questions you should ask of an investment advisor. If you're a successful businessman or a successful employee of a successful company, and you've got these 6-figure bonuses coming in every year and a nice salary, and you don't have the time to do it yourself, you have to trust a professional to do it for you. I did that for people for all these years. They knew that my emphasis was going to be what I just said. I am going to create you a growing stream of income and a growing depth and breadth of capital, a diversified portfolio of many different things, so that if one thing went out of business, it wouldn't bother you, so that if you got fired or quit, you'd have enough income to see you through. That's my job. My job is not to make your account statement look pretty because the market value is this high. My job is to give you the income to live the way you want to live. As an investor, you have to look your advisor in the eye and say, I don't care if my statement is pretty. I want my statement to produce income.
How can individuals balance growth, security, and preservation to achieve lasting financial stability and build long-term wealth?
The one thing about the income portfolio, which is central to doing all those things you just said, is that if you reinvest as much as 30% of that income, your market value is going to grow too, because you're buying securities with it that are income focused. But under the right circumstances, those securities are going to go up in price as well. My portfolios, which are 70%, 65% focused on income purpose securities, hit an all-time high last month. Still gets to those all-time high levels, but while paying the income and while you're reinvesting it, it's a slower process of making that number bigger, but it can be done. And that's all 4 of the things you mentioned just now. Income investing, quality securities, diversified portfolios, taking the profits, builds the wealth, builds the income at the same time. Income pays the bills. But you can take that same 7 figures, and if you have it in securities generating 10% a year, closed-end funds are doing right now, then you've got $100,000 of income coming in every year, between $8,000 and $9,000 a month, that you can go bribe the guys at the desk in a restaurant with, or you can go buy whatever you want to buy. That's the difference. That wealth sitting there in a portfolio with no income coming in doesn't do a damn thing for you. It's a pretty number, but it's not doing anything for me. I got kids going to college next year. I need $50,000 for tuition. This portfolio is generating $5,000. It should be generating $100,000. I got a kid that needs $50,000. He's going to have to take a loan because your portfolio isn't generating any income from it. That's what that statement is saying. People need to make sure they're having a good time doing what they're doing. So the thing I did was I realized that I was making more money than I was making at work. So I could afford to take the time off, develop my own business, and not go backwards. I had a product that I could visually present to people that worked. And I, of course, had to learn how to market it myself and who do you contact? In those days, there were no podcasts. I got on a couple radio shows. We went to conferences and set up booths all over the East Coast to spread the word. So that was my first aha moment where I said, okay, I don't need to work for them anymore. I can do it by myself and I can start my own business.
Leading the discussion will be Martin Johnson, the founder of Johnson's Law and Tax, a firm dedicated to providing comprehensive estate planning and tax planning services, as well as tax preparation. With extensive experience in both fields, Martin and his team specialize in helping clients navigate the complexities of estate and tax laws to secure generational wealth.
Estate planning is more important than ever, particularly with what's going on with the rising cost of living. There's tax law changes and family dynamics. All of these things can complicate an inheritance. It can complicate what you're trying to do to leave your assets for your heirs or the next generation. And so we talk a lot about the number one thing is probate avoidance. That's still important. It was important 10 years ago, it's important now, and it'll be important 15 years from now. Protecting your beneficiaries, particularly those who are minors or beneficiaries with special needs, and also the overall goal of reducing family disputes. All of these are reasons why estate planning is particularly important today. A well-designed estate plan is not just about who gets what when you die. It's really about passing down the assets, but also the financial knowledge and the values of the family. And so when you talk about a well-designed estate plan, part of it is communicating to your heirs why you put this plan together, what your intentions are, and the fact that you're trying to educate them and teach them so they can do it for their heirs. And this is where the whole generational knowledge comes in. So with generational knowledge, you can obtain generational wealth. But without that knowledge, the wealth is going to disappear within a generation. I think we as people of color have been bamboozled and scammed so much in our past that we have this trauma of, I don't want to pay for professional services. I don't want to pay for advice. But what ends up happening is people have to end up getting advice after they've made a mistake, or they're in tax trouble, or now they're in probate court, and they just didn't do themselves any favors. Let's say grandma bought the house for $50,000 back in 1950. Grandma's house now in West Oakland is worth $1 million. Well, if grandma leaves that house to you and passes it on to you through an estate plan, a living trust, when she dies, the value of that house in the eyes of the tax man goes up to $1 million. So if you sold that house the next day, that $1 million would be tax-free to you if you got it through a living trust, an inheritance. But if grandma adds you to the house 4 months before she dies, and then she dies, guess what? You get the house with a $50,000 value based on the value grandma bought it at. And now you turn around to sell this $1 million house and you have a $950,000 capital gains bill because you didn't have generational knowledge passed on to you about how to do proper estate planning. People who do their taxes, they need estate planning, and people who have estate planning need their taxes done. And there's some synergies that come when you have everything done under one roof. So generally, if I'm working on an estate plan and someone has their own CPA or tax planner, I need to communicate with that person about the type of trust we've created and some of the implications that I see that could be going on with tax. And I'm the same person doing the tax and doing the estate. I also offer bookkeeping services. When all of that is under one roof, I have a more comprehensive knowledge of what's going on, and there's less of a chance for something to fall through the cracks. Actually, there's no chance for anything to fall through the cracks about a particular deduction or something that's going on in a person's finances that could impact both their estate and their tax life.
And to help lead the discussion will be Dr. Brian, the founder of Sev Talks Money and a fellow podcaster. Dr. Brian focuses on helping women turn financial challenges into practical power. She draws from her late life divorce and financial rebuilding journey, emphasizing that true economic freedom starts with reshaping one's money mindset.
Have to really learn about personal finance, especially if you're in a low income area. You can't afford a coach. You can't afford an advisor. Take advantage of these community initiatives. Take advantage of these community programs and learn about how you can get from where you are to where you need to do. And take advantage of technology. There are a lot of things that are on the internet in different places that you can learn. The problem is, it's a double-edged sword because there are people on the internet who share information that are erroneous. Like one I saw that said, if you update your credit report with the correct address, you can get up to 70 points. Bunch of baloney. But people gravitate to that because they want the easy fix, the microwave fix. Now, me telling you there are 5 parts, there are 5 pieces to your credit score, and these are the things you need to do. You don't want to hear that because it means you have to look at your numbers and do some work. But the technology is there. Just do your own research and really try to ask somebody else. If you see something on the internet, ask somebody else who you trust to help you vet that information. So those are some of the things that I think people can do to lower the barrier when it comes to financial inclusion. Having access to basic banking services, I think, is one of the things that can help people understand how they can become inclusive in the financial landscape. Credit unions, your community banks, those are some of the ones that will take care of you in the community. The big banks, they're not going to be looking out for you. So you want to look at credit unions and community banks because they're the ones that are going to be offering you alternatives to the high fee services. You want to partner with grassroots communities, grassroots initiatives, the United Way, the CDFIs, all of those companies or those organizations, your churches, your community center, your libraries. I'm actually going to be teaching 2 classes in April for Financial Literacy Month at my library. So these are opportunities that we have to really learn about personal finance, especially if you're in a low-income area. You can't afford a coach. You can't afford an advisor. Take advantage of these community initiatives. Take advantage of these community programs. Grieve where you are, but don't stay there. Yes, this happened. Grieve it, and then figure out how you can move on from there. Look at obstacles as opportunities. And know it's hard because we're not only dealing with the physical impacts, we're dealing with the emotional impact of whether it's a lost job, a lost relationship, we're dealing with the emotional part. So give yourself grace to grieve that, but then look at that as an opportunity. What are the lessons that I can use from this to move forward? Is there a lesson that I can apply to me, or is it a lesson that I can help somebody else apply to their life? So that's one of the first things I would say is really, you have to change your mindset. Yes, take the time to grieve and deal with the after effects, but don't dwell there so long that you can't see the opportunity in what you're going through.
What do you want the listeners to take away from this particular podcast?
I think I want 2 things. The first is that there's always hope. No matter where you are in your financial journey, there is always hope. And the second thing I want them to understand is personal finance is personal. That personal in the front of it is personal. So when you are listening to like a podcast like this, or you are going to work with financial personnel, understand that if what they are proposing is not lining up with your values and what you want personally, that's not the person for you. So there's always hope no matter where you are. And then understand choosing the person that's going to work with you based on your personal values, because personal finance is personal.
Hey, Future Wealth Builders, if you love those episodes and highlights of the first quarter of 2025, you're going to love what we have in store for you for the second quarter of 2025. And guess what? April is Financial Literacy Month, and we have some great guests and great content in store for you. So make sure you tap in, make sure you subscribe and share. And as we always say, generational wealth begins with generational knowledge. I'll see you 2025 second quarter on the New Wealth Way podcast. Thank you for joining us on the New Wealth Way podcast, hosted by Dr. Joaquin Wallace. Our show is edited and produced by Ray Haycraft. To dive deeper into the world of financial wisdom and learn how to create your financial footprints, head to our website at www.drjwallace.com. For more updates and exclusive content, connect with us on social media by searching Dr. Joaquin Wallace. And if you have questions and comments, feel free to email us at thenewwealthwaypodcast@gmail.com. Remember, generational wealth begins with generational knowledge. And as always, thanks for listening. The content presented in this podcast is strictly for educational purposes and should not be taken as investment advice. The views and opinions expressed by our guests may not necessarily reflect those of the New Wealth Way podcast and its host or producers. Listeners are urged to exercise discretion and judgment before making any financial or investment decisions. Always consult with a financial professional or advisor before taking any action based on the content of this podcast. If you're enjoying the New Wealth Way podcast, we appreciate if you leave us a review. We're always open to topic suggestions and guest recommendations. Feel free to reach out to us directly with your thoughts and feedback. Thank you for tuning in.
And we'll see you next time on the New Wealth Wave Podcast.